Repeated sanctions will force central banks into gold ownership. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Palisades Gold Radio, January 17, 2025. The global financial landscape is shifting, and a confluence of factors is pointing towards a potentially significant increase in central bank gold holdings. In a recent discussion on Palisades Gold Radio, hosted by Tom Bodrovics, financial experts Bob Thompson from Raymond James and Larry McDonald, creator of the Bear Traps Report, delved deep into the complexities of inflation, sovereign debt, and the future of the US dollar. Their analysis suggests that the era of unchecked monetary expansion and reliance on fiat currencies may be nearing a turning point, potentially ushering in a new era for gold. The core issue, as highlighted by Thompson and McDonald, is the staggering $16 trillion debt increase witnessed since 2008. This surge, driven by expansive fiscal and monetary policies in response to various crises, has unleashed significant inflationary pressures. The consequences are particularly evident in the spiraling costs of energy and a mounting strain on long-term bonds. This is creating a challenging environment where market forces are potentially pushing the US dollar and bond markets towards a breaking point, suggesting a need for assets tied to something more tangible. The strength of the US dollar, a dominant force in global finance, is also under scrutiny. While a strong dollar might seem beneficial, it creates complexities for US exports and American companies with international operations. As Thompson and McDonald explained, a strong dollar makes American goods more expensive and hurts companies dependent on international sales. It also puts pressure on the Federal Reserve to buy bonds to maintain stability, inadvertently fueling inflation and potentially weakening the overall economy. The internal political tensions around a strong dollar make its future more unstable and difficult to predict. This instability, coupled with a growing lack of trust in the US government due to sanctions and geopolitical tensions, is driving central banks to diversify their reserves. Instead of relying solely on US Treasuries, many are increasingly turning to gold. This shift is not merely an investment decision, it's a statement of geopolitical risk aversion. Central banks are recognizing gold as a reliable store of value, a haven during times of uncertainty. Despite these underlying trends, gold stocks have underperformed the S&P 500 recently. However, Thompson and McDonald believe this creates an opportunity for investors looking for asymmetrical returns. With interest rates expected to remain low and inflation potentially normalizing at a higher level than the previous decade, gold could see significant appreciation. The conversation also dived into historical gold investing regimes and the current move back towards more favorable conditions. During periods of negative or low real interest rates, gold has historically performed well. This recognition of long-term trends and identifying opportunities ahead of the curve, as the experts highlighted, is key to successful investing. Furthermore, even the Fed's inflation target could be shifting. A move towards a 3% target, as was discussed, could be a boon for certain investment portfolios. Sectors like industrials, metals, materials, oil, and gas could all benefit from this environment. In summary, the narrative is clear. The current global financial system is under significant pressure. The combination of rising debt, inflationary pressures, geopolitical tensions, and a growing lack of faith in the US dollar is pushing central banks towards a seemingly inevitable conclusion: increased gold ownership. This shift, while still in its early stages, has the potential to reshape the global financial landscape for years to come. Investors would be wise to recognize these trends and position their portfolios accordingly. This is not just about chasing returns, it's about navigating the changing tides of global finance. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: dinarrecaps.com